So I'd kind of figured out a long time ago, as we all have, that there's a debt issue with the world, and that, when Lehman went bust and things like that happened, nobody knew who owned what. And somebody introduced me to blockchain back in 2012 and Bitcoin. And I thought, you know what, this could be the answer to all of this. So I started investing back then. And I wrote probably the first macro paper on valuing Bitcoin back in 2013. And I basically looked at it in this stock to flow model versus gold. And I thought, with gold at $1,300 at the time, Bitcoin could be worth as much as $1 million, which sounded crazy because it was at $200 then. And I bought it and I held it for a few years and then sold it in the rally in 2017. And then it had been on my radar screen as things were evolving. Then I'd always said that the next financial crisis, the answer to any crisis is now printing of more money. And therefore, crypto and macro were going to meet at the next crisis. And it was going to dawn on a lot of people that this limited supply digital asset had true value to create a new financial system and had a store of value property, even though it was extremely and remains extremely volatile. So 2020 comes along, and March comes along and it sells off hard. And I realized that this is the opportunity I've been waiting for. So I kind of started pounding the table, and at that time I was still involved. I had a fantastic bet in bonds that you and I had spoken to, Eurodollar futures, stuff like that. I was long dollars, all the usual kind of macro stuff going into that. And you and I had spoken, I think in Feb or early March, pretty much about the same opportunity set that we saw. But crypto started becoming a bigger position because what I did is I started looking at the chart of Bitcoin against other assets. And I'm like, holy shit, this is going to break out versus everything. Mm-hmm. So if this is the time, and us macro guys love a fast trending volatile market, because that's where we make our money. The real money's made in bear markets. For us, we grind it out in bull markets. So I see the opportunity, and I start building my position much more because I'm thinking, well, I don't need to own gold, I don't need to own bonds, I don't need to own equities, I don't need to own anything, just this asset. So that got me to about September 2020. Mm-hmm. And then I noticed people attacking me when I started saying, Ethereum looks interesting. I thought, oh, that's interesting. They're attacking me for liking something else. It's like if I went to you and said, oh, I like, Canadian bonds versus US bonds. You go, how dare you? You can't talk about Canadian bonds. It's like, it was ridiculous. So anyway, when people start doing that to me, I will go and do the work on it and figure out, are they right? Or is there some crowd illogic going on? So I started looking at Ethereum, thought, yeah, it looks interesting. I always start with the chart. It's my way of framing what the market's been doing and how it feels and the psychology. And then I start doing work on something called Metcalfe's law. Mm-hmm. And that is basically a way of analyzing these networks, whether it's mobile phone networks, the internet, Amazon, Facebook. When you look at the number of nodes on the network and the interconnection of the nodes, the more of those two things, the more valuable it is. So I plotted out kind of active wallets and a few other things and did a nice regression line on it, and it was perfect fit with price. And I'm like, oh my God. So then I started looking at Bitcoin and Ethereum and all of the other assets, digital assets, and they're all the same. I'm like, okay, so this is the narratives that are around about store of value and whatever it may be, the internet computer, all of this. Those narratives are driving those communities, but the reality is they were being driven by Metcalfe's law, and they were all the same thing. Once I understood that, I could now understand the space where I could start looking for network adoption effects. And the moment I opened those eyes, I realized that Ethereum had a much larger, faster network adoption than Bitcoin was having. And I actually started switching my portfolio. Again, everybody hated me for it. I then started buying a bunch of other coins, tokens, stuff I didn't really know a lot about. So I just took a small weighting, like 20%, and of my portfolio, which is now 100% crypto and has been for quite a while now, last year. And so I bought a basket saying, well, I'm an idiot, I don't really understand any of this stuff, but I want to see how it trades.
Yeah.
And then you start to figure out, okay, what are the macro bets within this space that I want to take? Where is this future going? Then we have DeFi, NFTs, all of these things explode over the last 12 months. and you're seeing adoption explode. So my framework is built around Metcalfe's law, adoption, understanding that this is community driven. It actually charts pretty well as well. And I personally can't short-term trade it. It's too extremely volatile assets are good for really short-term, super short-term traders, but I'm not that guy. My time horizon is 3 months to 18 months. So I just stuck it on and left it, and I've done nothing with it. All I've done is add. And I've tweaked it around a bit, moving some assets around. And I noticed there seems to be some sort of human behavior that goes on in the space where it trades very similar. So Ethereum is basically trading exactly the same as Bitcoin 2017. And it's been doing that for over a year now. And Bitcoin itself looks exactly like Bitcoin 2013. So it seems to be some crowd psychology, whatever dynamics that's driving it. And that's not going to persist forever. As you and I know, these things can be passing correlations, but it works right now. And it would suggest, along with a lot of other work with how many coins are in wallets and what's going on, that we should see explosive price action to year end. And in fact, when we look at the Ethereum price overlaid with Bitcoin 2017, this sell-off, this was in the chart a year ago, and it would say it would sell off in early November, and then it takes off and it explodes into year end. Mm-hmm. So it's been weirdly easy to trade with a long-term time horizon. And you and I know that things that are easy to trade don't last that long. But it has been. It's going to get much more difficult because there's now 9,500 tokens. It's not going to be about a bet about Ethereum and Bitcoin. So in 3 years' time, you and I will be talking about lots of different things, not taking away from these two assets, but there'll be less price appreciation. But the other key thing, sorry, it's a big soliloquy here, but the other key thing is that this is the fastest growth of any technology in all recorded history. If Metcalfe's law is the number of users using the network and their interconnection, well, the internet back in 1997 had 150 million users and was growing at 63% a year. This has 150 million users in the digital asset space. It's growing at 113% a year. So it's telling you the price is exponential.